Okay. Okay. Welcome back. I hope you all are well, and really sorry again. This was a technical internet issue, which is something which is unavoidable. Anyways, I think now you people can hear me, and you can even see the video and the screen as well. Is everything okay? Okay. Thank you very much for patiently waiting. Really sorry for this disruption because this is something, uh, outside our control. So extremely sorry for that. So let's begin, guys. Let's begin with this question again of CVP analysis, and here you are. Okay. Now, the Alka Hotel is situated in a major city close to many theaters and restaurants. The Alka Hotel has 25 double bedrooms and it charges guests 80 per room per night, regardless of single or double occupancy. The hotel's variable cost is 60 per occupied room per night. The Alka Hotel is open for 365 days a year and 70% of the budgeted occupancy rate. Fixed costs are budgeted at 600,000 per year and accrue evenly throughout the year. During the first quarter Q1 of the year, the room occupancy rates are significantly below the level expected at other times of the year, with Alka Hotel expecting to sell 900 occupied rooms night during quarter one. Options to improve profitability are being considered, including closing the hotel for the duration of quarter one or adopting one of the two possible projects as follows. So, project one is a theater package. Project two is a restaurant package. Okay. Now, what I'll do is first I'll go to the requirements. As I've mentioned this earlier as well, it's good to read the requirements first. So let's see the requirement. It says using the current annual budgeted figures, ignoring the two proposed projects. Okay, I haven't read that as well. Calculate the break-even numbers of occupied rooms night and margin of safety as a percentage for 4 marks. So this is ignoring the two projects. So definitely I'll ignore the two projects here and I'll do the calculations, and we'll see how to do the calculation. So not very difficult, to be honest. It's straightforward. You just have to keep the basics in your mind and you can easily perform the calculations. Now let's begin. I have to use this entire data, which is in front of you right now. And through this data, I have to perform my calculation. Now, this is a section C question. So obviously, you expect this to come using a spreadsheet again, and you have to solve this using a spreadsheet. So what I'll do is that I will also use the spreadsheet to make it easy for you to grip this question. So let's use the spreadsheet to find out the answers in this case. Okay. Now let's okay. So this is the spreadsheet. Right. Now, what are you supposed to work out here? So we need to work out the break even. Okay, we need to work out the break even. Right. So for break even, what calculations do I need to perform? Is I must I must remember the formula, right? The formula is extremely important. You must remember the formula. If you don't remember the formula, you won't be able to perform the calculation. So part A, we need to work out the break even, right? So, okay, break even in terms of revenue or break even in terms of units. Now, these are two separate things to keep in your mind. Break even in terms of room occupied. So yeah, in terms of room occupied, which means in terms of units, you need to work out break even. So if you are calculating break even in terms of units, so this means that the formula, you don't have to write the formula, but you must know the formula. So what is the formula? The formula is fixed cost divided by contribution per unit. Okay, this is what I need. So I have to show the calculations as well. So first thing I'm going to do is I'll work out the contribution per unit here, right? So for contribution per unit, I need to simple use selling price and will deduct the variable cost from that. So where is the selling price? So it's given 180 here, as you can see, and the variable cost is 60, right? So 180 minus 60 is contribution per unit. Okay. Now you have a break even answer because fixed cost is what you just need here. So it's 600,000 fixed cost divided by this 120, and you will get the answer of break even rooms, that is 5,000 rooms, right? So quickly, if you want to check the workings, it's contribution of 120, fixed cost of 600,000 divided with contribution of 120 will give you answer of break even in terms of units, and that's 5,000. Okay, that's 5,000. So clear? No issues. The second thing to work out is MOS. So let's have a look. MOS in terms of what? Percentage or units? So as a percentage, you need to work out MOS. The formula is simple. I'm sure you remember the formula. It's the sales minus the break even divided with sales into 100% is what you can work out through this. So this means I need to work out, first of all, the total number of budgeted units or the rooms that we can sell. So for that, what I will be doing is I need to use two things here. One is 365 days and 25 double rooms they have. Okay, so like this I can work out the total capacity, which I can say is my budgeted number of capacity, and I can, obviously if we work on 100%, so we can achieve this. Okay, so let's first do the calculation of total capacity. Right. So for total capacity, what is the thing I need to keep in my mind is 365 into 25 is 9125. Now this is the total capacity, but it says that 70% is the occupancy rate. Okay, if 70% is the occupancy rate, so I will definitely be working out the available or I would say these to final available capacity. So I would say that what they achieve, what they plan to achieve. So the expected capacity consumption is 70% of this total. So zero point 0.7 I'll multiply, and I can work out this. You can see the calculations. It's very much simple, straightforward. 9125. So 365 into 25, and this is basically 70% of that. So done. So this is the expected one. Now I can assume this to be the budgeted, which I can achieve. So it's easy now, is equals to, open the bracket. Sorry, I beg your pardon. Open the bracket. This is the budgeted sales minus the break even, close the bracket, divided with the budgeted sales again. And this will give me the answer of MOS as a percentage of sales. You can quickly look here. It's the budgeted sales minus the break even divided with the budgeted sales. And this will give me answer of 21.72, which I can represent in terms of percentage. So that's 21.72%. Okay. Is there any requirement for the decimals? I'm not sure. Let me check here. No, and not as such. So no, not an issue. How you represent. So that's 21.72 answer of MOS as a percentage of sales. I hope this is clear without any issue. This is the part A answer. So I'll give you a chance to ask the questions if you do have. Just hold it on, and once I am done with this part B next, then I will give you the chance to ask the questions. So done with the first part, not an issue. It's a single product situation because it's just a single type of a room or service that they're offering. So no need to work out weighted average here. The second question is about ignoring. Again, you have to ignore. So ignoring the two proposed projects, calculate budgeted profit or loss for quarter one. So you have to work out budgeted profit or loss for quarter one. Okay. And explain whether the hotel should close for the duration of quarter one or not. So you have to calculate budgeted profit or loss for quarter one, first of all, and you have to explain as well whether hotels should close for duration of quarter one or not. So you have to explain that as well. Okay. So first of all, ignoring the two projects, I will first work out the budgeted profit. So how to work out a profit? So is it difficult? No, it's easy. Not a big deal, I would say. First of all, what I'll do is I will work out the contribution, which I can easily do here, just because I know the contribution from the above workings I have, that's 120. So I have this 120. And how many rooms do they expect to sell in quarter one? So you can see here, this is quarter one, and 900 rooms is what they expect. Okay, so it's very simple. I simply need to use 900 and will multiply that with 120 contribution. So this is 108,000 is your total contribution, right? Because it's very much clearly written that 900 rooms we plan to utilize. Fixed cost is given to me that I will deduct. Obviously, fixed cost is 600,000 that I will use here, and it's 600,000. But one thing you have to keep in your mind, that you may do a mistake. That's per year, and you are doing the calculation for the first quarter, right? So you can see here as well, it is written for quarter one. So don't be misguided in this case. It's quarter one. So fixed cost that is given is an annual one, and you cannot use this annual one. You have to prorate this into 4 quarters, that is for the 3 months. Okay, so what you're going to do is you will definitely make an adjustment. Is equals to, open the bracket, divide by 12, okay, to work out the per month fixed cost into 3 months. That's because one quarter is of 3 months, right? So divide by 12 into 3 will give you answer of 150,000. Yeah, we can make this negative if you want to. So using a negative sign, that's 150. And now you can work out the profit. So let's see what the profit is. Let's apply the sum formula and let's work out the profit. So the profit is 42,000 loss that you have worked out in this case. So it's a loss of 42,000. I hope this is clear to all of you and no issue as far as this is concerned. 42,000 is basically the loss that you are incurring in this case. And perfect, no issue. Now, as far as the working is concerned, it's quite simple. What to explain, that's important. What to explain? Explain whether hotels should close for the duration of quarter one or not. Now you have to explain whether it is viable to close it or not. Now, what do you think? Now, here I will ask your suggestion as well. Yes, friends. Should we close? Because we are having a loss. Okay, so I'm getting straight no's from you people, and that's good. It's just because that listen, first of all, it's first of all quarter one. Okay, and even if you close on the basis of quarter one, you are doing a wrong decision because fixed cost is a cost that is fixed, and if you close it, so you cannot avoid this fixed cost. Agreed? This means if you close it, so your fixed costs will continue to incur, which means that in case of closure, you will lose the contribution as well. So, first thing is that should not be closed. It should not be closed. Okay. Now, why is that? Is because loss of contribution will be by 108,000. That's fine. Because fixed cost will continue to incur. That's fine. It's a committed cost. You have to pay the fixed cost for the entire year. Okay. And if you will close, remember, if you will close, so this means the contribution that you are earning will be gone. And you will be in a further loss of 100,000. You will incur further loss of 100,000 because if you are uh, leaving the contribution by 108, so obviously this loss fixed cost will will remain same. So this means that you will incur the loss by the amount of the contribution you will lose. And same, you need to keep this in your mind as well, that it's just the one quarter, which means coming quarters, there are your regular customers, and once you close, so you will miss out on your regular customers as well. Now, those who are coming here, 900 ones, so they might go somewhere else. So even the regular customer might go away because of closure. Are you getting my point? So this is a definite risk. This is definitely a risk that your regular customer might go away because of closure. Okay, so it's not feasible to close because fixed costs will continue to arise. It's not a directly attributable fixed cost that you will save on the fixed cost. that will be incurred irrespective you continue or not continue. So it's not wise to close it. Okay, great. This what you have to write in form of a paragraph on a word processing sheet. Now, uh, if you have any questions, please. If you have any questions, so you can ask. Okay, is this clear up till now? Both the parts? Perfect. Yeah, you can write about the opportunity sales lost. Yeah. No, don't write the comments in bullets. I have already mentioned this will be written in form of a paragraph on a word processing sheet. Okay. Okay, that's great. So done with this one. Okay. Now, Umar, fixed cost is a cost that will remain constant. You have to pay the fixed cost. So if you close for one quarter, will you avoid the 150 fixed cost? You will not, because it's an annual fixed cost of 600,000. So you definitely cannot avoid this. So closure doesn't mean that you can save on your fixed cost. In fact, you will actually will be having a loss of the contribution that you will lose. Okay. Muhammad Umar, that's so simple, man. In form of a sentence, you can write in form of paragraph that the Alka hotel should not be closed because the company will incur a loss of contribution on the basis of closure. Full stop. Then you can write that okay, the fixed cost will not be saved. Fixed cost is not avoidable, so you have to pay the fixed cost in any case, right? Okay, how we got 108 contribution? That's very much simple, my friend. See, 900 were the expected number of people who will come to your hotel, and the rest you multiply that with the contribution per unit. So that is how you got 108. Okay. No, company is not closing its operations completely. They are asking us whether they should close in quarter one. So quarter one doesn't mean that you can save the entire fixed cost. It's not a complete permanent discontinuation of the business. It's a temporary one. Okay, Omar, I hope this is clear now. Right. So I hope this is clear to all of you. And I've answered your questions. Now let's move towards the next part to see what is required in the next part. Okay, so the next requirement is what? Calculate the break-even point in sales value, okay. Break-even in terms of sales value of project one, okay. And explain whether hotel should adopt the project or not. Okay, now let's go to project one. So I need to look at project one, what project one is about. For quarter one, if you don't discontinue, so they gave us two proposals, right? So they says for quarter one only. Now this is just for quarter one only. The Alka Hotel Management would offer guest a theater package. Couples who pay for 2 consecutive nights at a special rate of 67.5 per room will also receive a pair of theater tickets for a payment of $100. It's a theater package that they are introducing for quarter one. The theater tickets are very good value and are the result of long negotiation between the Alka Hotel Management and the local theater. Okay. The theater ticket costs Alka 95. The Alka Hotel's fixed cost specific to this project are budgeted to be $20,000. The hotel's management believes that theater package will have no effect. Okay, will have no effect. Now that's very important on their usual quarter one customers, and those are 900. Okay, these are the new usual quarter one customers, who are all business travelers and who have no interest in theater tickets, but will still require their usual room. So the current audience remains unchanged. So whatever you will get will be your new audience. Okay. This is what you need to keep in your mind, that all that will come to you will be your new audience, as your current audience will not be affected. Okay. So what I need to work out, I need to work out break even in terms of sales revenue, and then I have to explain whether we should go for this project or not, right? So I need to work out break even in terms of sales revenue. So let's come to the spreadsheet again, and here I am. Part C. Okay. No, it's part B, I guess, right? Yeah, it's part B, project 1. Okay. Part B, project 1. So what's the project 1 here? Project 1 is about the theater package, and let's now think how we need to work out this. So be with me and let's have a look exactly what we need to do. So for break even, what I need, break even sales, I need fixed cost divided by CS ratio. CS ratio. So the formula of break even sales is fixed cost divided by fixed cost divided by CS ratio. Okay, that's fine. That's fine. Now, fixed cost we know, CS ratio we need to work out. So for that, what I need first of all per units selling price, right? So how will I work out sales per unit? So let's do the calculation for that, sales per unit of room. So first I'll see sales per 2 nights. Okay, sales for 2 nights. Now, why I'm saying 2 nights? Because it's a package deal, you know, that couples who pay for 2 consecutive nights. So you have to keep this in your mind. So they pay 67.5. Okay, so what I'll do is that 67.5 multiplied by 2. This will give me the sales for 2 nights, right? So that's 135. Okay. Then sales value that I will get through the tickets. Okay. Tickets. So how much is that value? That value is 100. 100. Okay. So the total of these two is 235. 235 is the total what we are earning from one pair who comes to us in the hotel. One pair who comes to us in the hotel. Okay. Now, here the question is in front of you. To make it a bit interactive and interesting, I'll give you 2 minutes here to work out break-even sales revenue. Will you? Great. You have 2 minutes. You have 2 minutes. I've given you the starting point to work out the answer. Okay, do it please. Okay, so found out the answer. So let me see what answers you people are getting. So 235. I can see answers here, 235,000. And okay, that's great. So let's begin with the calculations. Now, 235 is the selling price, what you have here. Now, the variable cost, because I need to work out the contribution, right? So now the variable cost. Now, variable costs for rooms will be how much? Variable cost for rooms, it's simple. It's 2 night stay, and each day the variable cost is of 60, as we have already seen that earlier, 60, right? So it's 60 into 2. Perfect. Then you have the variable cost of tickets that ALCA needs to bear, and that's the special price of 95. Okay, so done with this one as well. Now you can work out the contribution. So let's see, the contribution is how much? Okay, so let's apply the sum formula. Open the bracket. 235 minus 120 minus 95 is 20 is the contribution you are getting per pair who is coming for this deal. Now, after the contribution, it's all clear set. You have fixed cost. And how much is the fixed cost? Fixed cost is 20,000. Yeah, but remember, I need to work out CS ratio. So for CS ratio, what I'm going to do is I will use this 20, will divide this with 235, and this is 0.08511. In terms of percentage, it's 8.511. You are getting the answer. So I hope this is clear. This is the CS ratio. Now, let's work out the break even. So the fixed cost that is specific to this this theta option is 20,000 that I have to take here. So it's 20,000 divided by this figure, and the answer is 235. So those who told me 235 were dead right. And this is the answer of break even in terms of sales revenue. So that is what was required to be worked out. So I've done the calculation of that. I hope this is not an issue for you people, and that's quite clear that what exactly we need to do when it comes to break even sales revenue, right? Perfect. Done. No issues at all. Okay. Now, after this, the next thing is to explain whether hotel should adopt the project or not. Now, what do you think? Should we adopt this project or not? So your answer will definitely matter here, and you really need to think about it before you give your final judgment about this respective part. So should we go for this or not? That's the question. Okay. So now you see here that okay. Now if you just focus here, should we accept this option or not? What do you think? Let me see what you people say. Okay, it should be opted. It is earning a contribution. It is too much. Have no effect on quarter 1 customers. That's perfect. It should be opted. Okay, now perfect. Now see. Okay. Now it's really interesting part, to be honest. See what you have done here. First of all, let me tell you. In terms of contribution, you say it's positive contribution and all. I accept all these things. Okay. But you have worked out the break even sales. That's perfect. No issues in that as well. That's all good. But my point here is, my question here is, okay, can you work on and tell me break even in terms of number of rooms, units? So yeah, we can do that. If I just work out, for example, just to give you the idea, if I work out break even in terms of what you say, sales units. So what I need to do, it's simple, break even in units if I work out. So what I need to do here is fixed cost of 20,000, divide this with the contribution per unit, and that is 20. Okay, which means that 1,000 rooms I need. 1,000 rooms I need, and those I need for 2 nights. Those I need for 2 nights. Are you getting my point, everyone? So I need 1,000 rooms, and that too I need them for how many nights, friends? I need them for 2 nights. So I multiply this with 2. This gives me the idea that I need rooms for 2 nights. I'll multiply this with 2. So this is very much clear that I need rooms for 2 nights. So 2,000 basically. Okay. Now the interesting part is 900 rooms are the normal ones. Okay, the usual ones which you cannot touch, because you know your 900 rooms are already occupied, and you altogether need 2,000 here for 2 nights, right? 900 are already occupied. Now, how many rooms do you have in quarter 1? That's the question. So let's work out rooms availability in Q1. Okay, so how to work out? It's very simple. See, I've done the calculation above. Here is the working where I worked out the total capacity of 9125. Okay, 9125 is my total capacity, even though we are operating at 70%. But let's ignore that and just assume that if we operate at 100%, then per quarter, how many rooms do we have per quarter? So I will divide this with 4, and this gives me the answer of 2281, which means the total rooms available are 2281. Now, how many rooms you need? You need 2,000. And the normal customers, are occupying 900. So you don't have the capacity. Now, one option is that you refuse those 900 ones. Sorry, we will not accommodate you. That you cannot do, because those are your usual customers. And if you go for this theater package, so for theater package, break even is at 2,000. Right? Break even is at 2,000, right? Because it's for 2 nights. Are you getting my point, everyone? So this means that you require 2,000, and it's very much clear that you don't have the option in that case. So you cannot go for this option because you don't have the availability, right? So lack of availability is there. Are you all getting my point, everyone? I'm sure you never thought in that direction, that you don't have the capacity. Now for break even, you need 2,000 rooms, man, for 2 nights. You need 2,000 rooms. And your 900 customers are already usual ones. Total capacity you have is 2281. You cannot go for this one. Understood? Due to insufficient capacity, you don't have the option. Okay, Daniel, we are not now. Listen, we are just talking about the theater uh, decision making. Okay, that's why we considered only the theater's fixed cost, right? Because we want to go for the theater decision making. So that's why we just evaluated that option of theater only. That's for quarter 1 only, right? So the other fixed cost is a one that will already continue to incur. If even I go for theater, then also it will incur, and if I don't go for theater, then also it will incur. No, Umar Sharif, listen, this deal requires you to come for 2 nights. You have to understand this. See, in the question, it is very clearly mentioned 2 consecutive will pay at a special rate of 67.5. So that's the deal. You have to come for 2 nights. You don't have any option that you'll stay there for 1 night and don't stay for the other night. Okay. Okay. How was 1000 calculated and how was 2281? Okay. Let me explain this again. Let me explain this again with the calculations as well. See, listen. You can see here that 20,000 is your fixed cost for this theater project. And I'll divide this with contribution per unit, right? So I'm getting the answer of 1,000. Now this 1,000 is basically the break even. Okay, the break even. We need 1,000 deals. Deals. I'm talking about deals. Okay, we need 1,000 deals. We need to sell 1,000 deals, right? I can write here 1,000 deals to make it more clear. And in every deal, there is a requirement to stay for 2 nights, which means 2,000 room nights are needed. 1,000 deals you need to sell. To make this viable, you need to sell 1,000 deals, and for each deal, you need to stay 2 nights. So you need 2,000 room nights. Okay, 2,000 room nights. Now, how many nights are available to you? That's the question. Now, you have total, if you just see here, if you have total 9125 capacity annually, 25 rooms into 365. So the total rooms you have is 9,125 for the entire year. So I divided this with 4 quarters to work out the quarterly capacity of the rooms. So once I divided it with 4, so my answer is 2281 room capacity availability I have. Now the rooms that I have are 2,281 and 900 are those usual customers that are booked, that will remain same. So out of 2,281 rooms, 900 rooms you will give to the usual customers. So you will, obviously you'll be left with how much? You'll be left with some 1,300. So now 1,300 rooms you have, but for this theater deal to break even, you need 2,000 rooms. So due to lack of availability, this is not a viable one. The project is not viable. Okay, because you need 2,000 rooms to make it viable. So 1,000 is the deals that you need to sell for this theater package, and each deal required 2 room nights, which means 2,000 room nights are required. Have I answered all your questions? Yeah. Yeah, obviously, Umar Sharif, it's very much clearly written. You have to accept 2 nights and then you get the ticket option. That's the deal. Okay. uh, we are supposed to take 70% capacity, right, in the exam. Now 70% was for the first part, that was okay. Here here if we operate at our full capacity as well, we are assuming if we work out at our full capacity, then too we cannot accept this theater uh, package here, just because we don't have the availability in quarter one. So have I answered all your questions? And now is it clear how I worked out break even? 20,000 is the fixed cost divided by the contribution per unit from this deal. Is it clear, everyone? Say yes, those who asked me the question, so that I can move on. No, we don't have to write in the same format. I'm just writing in bullets. You have to write in form of a paragraph on a word processing sheet. This is what my point is. There will be a word given to you. So you will write in form of paragraph what all I have written here. What all I have written here. See, this is all. You will write in form of a paragraph by constructing a sentence. Okay. This is how you have to write. Got it? Clear? Okay, great. So that's done. Now coming towards the next part. And let's see what the next part is about and what it says. I hope there are no questions relating to this one, right? Great, thank you. The next one is about project 2, which says, now this, keep this in your mind, this was for quarter 1 only, but for project 2 it never said quarter 1 only. Okay, so there is a scope to extend the Elka hotel and create enough space to operate a restaurant for the benefit of its guest. Okay, so now they are planning to, open up a restaurant here as well. The annual, see, this is the annual one. Cost, revenue, volumes for the combined restaurant and hotel are illustrated in the following graph. As an example, they have given you as an example. So the maximum rooms that they have used here as an example is 8,000, where you will earn 2 million revenue. And on the basis of this 8,000, your total cost will be 1560. Okay. What is this? This is point of no profit, no loss, known as break even of 5161. And what is this? And this is your margin of safety, which means your budgeted units, budgeted sales units are 7,300, because how you work out MOS, you know the formula? It's budgeted sales units minus the break-even units. So this means here what confusion examiner is trying to create and trap you here is to confuse you by this 8,000 here. So remember, this 8,000 is an example where it is mentioned, it's an illustration, but your actual estimated budgeted sales that you are planning that you will achieve is 7,300. And this is how they have worked out MOS here. Got it? Is this clear to all of you? Say yes or no. It must be. It must be. Right? Perfect. Now let's see what is the requirement. Yeah, remember, theater package is not part of this. Using the graph, quantify and comment upon the financial effect of project 2 on the Elka hotel for 8 marks. There are 4 marks available for calculation. Okay, so one can expect this part to completely come on a word processing sheet. Okay, so here we are, and we need to solve this part. So for that, let me do one thing. Let me open a word processing sheet as well, so that you people also get to know about the drafting and all. I'm again telling you, I will not write in paragraphs. Obviously, I cannot write now, but I'm just telling you this is a word given and you'll write in terms of bullets. Okay. So part D here you have 4 marks are also available for the calculations as well. Now, if you look at the graph, quantify. Quantify means by looking at the graph, just quantify the things. So remember, this is combined, okay? Combined for the hotel that you're operating right now and the restaurant that you will open. So first of all, there are certain key findings that I can quickly observe here is that my fixed cost is 800,000, which previously was 600,000, right? So it's a clear sign that the fixed cost has increased by or will increase by 200,000. See, through the graph, it's clear it's 800 and previously it was 600. So the fixed cost will increase because they asked us to quantify, and this is what we'll do. Increase by 200, which is 800 minus 600. Okay, done. Secondly, what about your sales or selling price? So as an example, because selling price per unit remains constant if the line is straight, you know, this is a linear line. And you must know this is a break-even chart, okay? It's a break-even chart. So it's a linear straight line. And when the line is straight, linear, which means the per unit is constant for sales. So if I use this as an example, 2 million divided by 800. So my selling price will be selling price per room is how much? Let me work out. 250. It's 250 per room compared to previously how much it was? 180 per room. Okay? Compared to 180 per room, which is clearly showing you increase in the selling price. And this is just because of what? Obviously, it's because of the restaurant and food and all. Okay, food revenue is also part of this now. Okay, clear? Perfect. So food revenue is also part of this. So that's so easy, simple to understand without any issue, right? Then third, if you observe from the graph, and that is you are given with a total cost as well. Okay, so total cost includes fixed and the variable. Fixed is clear, 800,000. So how much is the variable? So if I minus 1560 minus 800 if I do here, so I get answer of variable which is 7,60,000, and this variable is basically based on 8,000 rooms, okay? Because variable cost per unit also is something that remains constant per unit if nothing is mentioned, so we assume that to remain constant. So if I divide this with 8,000, so I will get per unit of variable cost as well. So let's have a quick look. What is the answer? It's 760,000 divided by 8,000 is 95. 95. So 95 is your variable cost. Now imagine, has it changed? Yeah, it has, because see, this is the total cost. You deduct the fixed cost from this, you're left with variable cost. You divide this with 8,000. So the previously variable cost was 60, which has gone up to 95, and obviously because of the restaurant, this has happened. Okay. So remember, there are 4 marks for the calculations as well, right? So you have to do calculations to quantify. So you can write here, variable cost is 760 divided by 8,000 is 95 per room, which has gone up from 60. Okay. And obviously this includes the cost of food in a restaurant as well. So this has gone up. Perfect. This is the quantification. By looking at the graph, this is what you have to do. A very similar question to this came previously by the name of Swimco. In that as well, you have to observe the graph only and have to quantify the things. Done. Now, if you keep this in your mind, so you will realize here one more thing, and that is the break even has also changed from, now the previous one was 5,000 to the new one after this is how much? 5,161. So the one that you worked out earlier was 5,000 and this is 5,161. Okay, so you can quickly check here as well. So it's 5,161, which means the break even has also gone up, which means that now you need 5,161 rooms to break even, right? But at the same time, one thing that is expected more, break even has gone up. That's something dangerous, I would say. More number of rooms you need to sell. But the point here is because your fixed cost has gone up. Okay, the major reason is that your fixed cost has gone up. That's why your break even has gone up. But you have to keep one thing more in your mind, is that your budgeted units, because this is MOS. Okay, so if you work out the MOS, if you work out the margin of safety, keeping in mind your budgeted units, so let's see what is the answer of MOS here. 7,300 minus 5,161. It's 2,139. And if I convert this into percentage, so the answer that I'm getting here is 29.3% is margin of safety. So guys, 29.3% is your MOS, margin of safety. Now, previously your MOS was how much? Do we have the numbers? We do have. Previously, your MOS was 21.72, maybe 22%, and now it's 29%. So the increase in margin of safety is good or bad for you? It's good. It's a safer option. It's more safe to have high percentage of MOS, and the reason is your sales is up. Your sale is expected to go up from the previous one, because previously you were operating at how much capacity? 70% capacity. Previously you were operating at 6,388 capacity, but now you expect to go to 7,300. So from 6,300 you expect to go to 7,300, and that's because of the restaurant that you will open. Getting my point? So your margin of safety gives you a good idea. So having said all these things, you must keep in your mind that I'll write here the MOS has improved, and I've done the calculations. I can just copy paste it. 7300 minus 5161 divided by 7300. So it's 29% from 22%. Okay. The occupancy has also improved or will also improve. 7300 now divided by how many rooms were available previously? Total capacity was of 9125. Okay. So 9125, which means that your capacity now is 80%. That's good. 80% from 70% previously. So you can see this is what you have to write, and again, no bullets. Multiple paragraphs is what you have to use. Obviously, right now what I've written is very short, precise. This is not what you are expected to do. So you can use a separate paragraph for this one, separate paragraph for this one, small paragraph for this one. Maybe you can club these two together. So in different paragraphs, you have to write the answer with the quantification that I've done in front of you like this, in multiple paragraphs. So this means that this option is a safer option. Okay. One can say safer option because your MOS is improving and your capacity utilization is also improving. Okay. And this what you had to do in this case for 8 marks. We have 4 marks for the calculations that I did in front of you people, and the rest is for the theory. In multiple small short paragraphs, you have to draft the answer. I hope you liked my explanation, and this would have made things really clear for you. Any questions? Repetitive questions, not much, but swim company is similar to this last part. You have to show the calculations that you have done in bracket the way I've done here. In part 3 and 4, variable costs, you mean to say about this part D, right? Okay, let me repeat this. You can see in the graph, you just go above, see in the graph, at 8,000 number, your total cost is 1560, in which 800 is the fixed cost. So the leftover is 760,000 variable cost, which is based on 8,000. Okay, now 8,000 is a sample number, an illustration given here. But your budgeted numbers are expected are 7,300. Okay, that's the confusing part that examiner did here. So this is just for the purpose of calculating the selling price per unit. This 8,000 is just given for the purpose of calculating selling price per unit and the variable cost per unit. But the final conclusion, or what I say, final understanding that you will get is through this budgeted 7,300. Okay, so that is what I did, and it came out to be 95. Previously it was 60. So this is how I worked out the variable cost. Okay. Quantify means that by the help of the numbers, by the help of the numbers, you have to tell the change. Okay. Okay. Change in occupancy. Definitely, I can explain you. Change in occupancy is very straightforward. You just saw that now budgeted is 7,300, right? And the total capacity that we worked out earlier of 9125 was based on 25 rooms into 365. Okay. So now if we expect 7,300 rooms will be occupied, so it's 80% capacity now we have compared to previous 70%. Okay. Margin of safety tells after break even how many units you have that will give you a profit. Because at break even, it's no profit, no loss. So after break even, how many units you have that will give you profit. So more the units, the more better it is for the business. Okay. Friends, is this entire question clear to all of you? Hassan, I cannot understand your question here. Can we also apply the application of knowledge rule to part D when analyzing the paragraph? I'm not getting, I use everything. It's all application based. I have used everything from the graph. So it's totally application based. Okay. So guys, understood? Uh, Rounding of instructions, I will further explain when I will come to tomorrow's session where it's all OTs, okay? Because that section is one that relates to OTs. Okay. Thank you, Mohammed Fazil. Everybody, is this clear to all of you? The explanation, the way I've handled the question, happy? Understood? Thank you very much. Thank you very much, friends. And I'm really sorry for the delayed start today as well. But this was something we could not do anything. Many, did join and they could not continue. Anyways, do spread the word amongst your friends to watch the recordings later on if they were not part of the session. Okay. So we are done with this first part, the first question here. And again, I'll take the session 30 minutes more today just because of the delayed start to compensate the lost time. Uh, because what I need at the end of the day is my help should be maximum. Though things were not in my control, but still I will give you 30 minutes more today so that I can help you more and more and it should be beneficial for you. Yes, Arslan Hamid, I will do this tomorrow. Okay. Okay. So let's take a 5 minutes break here so that we just refresh ourselves. And after 5 minutes, we'll start with another question and another topic. So remain connected. Meet you after 5 minutes. Welcome back. So, I think it was a good discussion in relation to CVP analysis that we did today. Now it's time to move towards the next one, and that's the most interesting one for lots of you, and that's relevant costing, right? So, ready for relevant costing, everyone? Okay. Quick confirmation. Can you hear my voice and the screen as well and the video? Is everything working well? Great. If any one of you can just update on the WhatsApp group of which you are part of, that the session has resumed, so that others can even join. Okay, those who uh, have joined me for the first time today, this is my WhatsApp number. Make sure you send me a quick WhatsApp if you are not part of the groups. The first group that I made 3 days before has already, being completed. It's full. So I shared the new link, and admin will also share that new link as well. Okay. Let's begin with relevant costing. Relevant costing remains a tough area. Reason is that people are not very much comfortable, not understanding the basic idea to deal with this topic. So what I want every one of you is, considering a shortcut to make it easy, you need to remember a simple rule of six. Okay, remember a simple rule of six. So what's rule of six? Two things that make a cost, that make a particular thing relevant for the decision making, and these are those two things. Okay, and four things are those that make a thing irrelevant, right? So things that make this relevant for decision making is known as incremental cost slash revenue. Second is opportunity cost. First of all, what is relevant cost? A cost that is relevant for the purpose of decision making. Now, if you are taking a decision, so should you consider that particular thing for a decision, or you should not consider it? Obviously, sometimes what mistake we are doing is that we consider all other things which are not relevant at all. So we are wasting our own time and time of others as well. So we have to consider things which are directly related to that specific decision. Now, if you want to do, now you want to give paper in September 21. So for this decision, will you consider previous paper examination fees? Previous paper examination fees that you have paid, will you consider that? No, that's irrelevant. That's something that has been done in past. You will consider the fees that is applicable right now. That is your relevant fee for you. What they have charged earlier, what you have paid earlier is not relevant. You can start considering subscription fee that you have paid at the start of the year. Is that relevant for you? No. So you have to keep this simple, that it's a short-term decision making. Short-term decision making means, and there is no definition of short-term, okay? It depends on the nature of the decision, the situation. For me, short-term would be different compared to for you, right? So yes, you have to keep this in your mind. Now, relevant costing is used for different decisions. Decisions like one-off contract, a common one. That is, there is some one-off opportunity you have, and in that one-off opportunity, you have to take a decision whether you should go for that or not. So you will use relevant costing. For a shutdown decision, for example, There is an option to close a business on a temporary basis. The one that we just saw in the previous ALCA hotel question, they were thinking to close the hotel for quarter 1, and I did mention that, okay, fixed cost is a cost that you will incur in any case. That's a committed cost. So for shutdown decisions, for make or buy decision, that is, should you produce a product in-house or you buy that from outside, make or buy, and then further processing decisions. Now, my point here is you all should have a really good grip over this rule of 6, and this will make your life really easy. The first is incremental cost to revenue. If one particular cost will arise because of your decision, so that's incremental, that's additional, and that's relevant cost, and it could be the revenue as well. I'll give you examples when I move towards the questions further. Okay, opportunity cost, cost of second best alternative foregone. You have two options, this or this. You went for this one, so you left this one. The one you left, the one you sacrificed, the one you foregone is opportunity cost. That's opportunity cost, and that's relevant. So a cost will be relevant, either it is incremental, just arising because of a decision, or it's an opportunity cost. If this falls under incremental, so that's a relevant. If it qualifies through opportunity, it's relevant. So a cost will either be incremental, additional one because of the decision, or it will be an opportunity cost. A very simple example, you have one job that you are doing and that's paying you 100,000. And now you got an opportunity of the next job which is offering you 1,20,000. Now what will you do? Will you go for job? Will you continue job 1? No. If looking at the financial numbers, you want to go to job 2 of 1,20,000. So what you did, you went for 120,000 job. What sacrifice you did? Out of the two, which was the second best option? That was job 1 that were paying you 100,000. So you left job 1 option, you sacrificed on the current 100,000, and that 100,000 is your opportunity cost. That is your opportunity cost. The one that you left, the one that you sacrificed is your opportunity cost. So there is a misconception for this opportunity cost. The one you are leaving, the one you are sacrificing, the 100,000 current job that you just left and joined the higher one, so that 100,000 current job is opportunity cost. 4 things will make a cost irrelevant for a particular decision. You have to see whether that particular thing is part of this 4 or not. So first is sunk cost, past cost, already had been incurred. You can't do anything for that. Now, at the time of taking a decision, something that has already arisen or occurred before is not relevant. Like the subscription fee that you have paid at the start of the year is not relevant. It's a past cost, and it's not relevant for the decision that you have to give exam in September or not. So that subscription is not a relevant cost because you have already paid for that, and that doesn't relate to decision. So it's a past cost, not relevant. Committed cost will be paid in future. Will be paid in future, but the commitment to pay the particular thing, the commitment has been done in past. So because the commitment to pay has been done in past before the decision making, though you haven't paid it, still it's a irrelevant cost. People get confused sometimes. What's the difference between sunk and committed? So I say that sunk already had been incurred. but committed you will pay in future, but both are irrelevant because the commitment to pay was done in the past. Notional depreciation, artificial cost, depreciation. It's not a genuine cost. It's an estimated one. Notional, any imaginary cost is irrelevant. That is not a cash flow, to be honest. Okay? The notional depreciation is irrelevant. Reapportionment of existing fixed cost. Now, the word is very important to keep in mind. Existing. You know, the best example for this is what? The best example for this was the ACCA Hotel question, Q1 fixed cost. What we did, we worked out the quarterly fixed cost, right? But that fixed cost was the one that you will incur anyways. So if there is a committed, if there is a fixed cost that you have to incur, and you just reapportion that fixed cost to some product or service, so that is not relevant for that product, service, or for a decision. I have a factory and I'm paying the rent here. Now I got one job. So to this job, because this is a job I'll conduct on my existing factory. So what I did, I am charging the portion of the existing fixed cost to that job. I'm charging the cost of that existing fixed cost to that job, the certain amount. That is not relevant for this job, because if I wouldn't have accepted this, still I would have paid the rent. So existing, which is already there, which is not getting increased also, it's same. If you're charging that existing fixed cost to your decision making or your option, that's irrelevant. So rule of 6 is what you people have to keep in your mind. If you remember this, this is a game changer. Any question you can solve through rule of 6. Let's start with a decision and see how this rule of 6 will provide me, you, the benefit. For that, the question that I've chose today is Belton Park Resort, a very good question where you can easily, openly use relevant costing principles. And not only this, this question is a one that I'll give you for homework as well. So I will solve and will give one portion of that to you people to solve after the webinar, so that you also can practice the concept that you have learned. Okay. So let's begin. Let's read the requirement first. The requirement is calculate incremental additional cash flows for the month of January, considering 31 days, if Belton Park Resort decides to keep open. If they decide to keep open in the month of January, which means they want to take a decision whether we should keep the park open or not. So decision making is about whether I should keep this open or not. So for this decision making, consider relevant cash flows, incremental cash flows. Okay. So this in each case state whether it should remain open or close for hotel and for water parks. Now what I've planned here is that hotel is what I will solve right now, and water park is what you will solve from homework. Okay, good idea? Yes or no? Because like this, what you will learn, you will do by yourself later on. It will give you a lot of good practice. Like the idea, everyone? Say yes or no. Okay. Now let me see any questions you have. All short-term decisions will be made on the relevant cost basis. Short-term, Umar. Okay. So ready everyone? Say yes or no. Are you with me? Hope you're not getting bored. The session is going good up till now. Say yes or no, everyone. Great. Yeah. Tomorrow is the official last day. But for the plan, I will share with you people. So group is extremely important. Remain connected through the group. Okay. Otherwise, you will miss some good things. Now, let's begin with this question. And we have to take a decision whether we have to keep it open in January or not. So think about relevant stuff and irrelevant stuff. For that, rule of 6 is important. Okay. I will solve this on a spreadsheet again, considering this is a CRQ question. So we'll solve this on a spreadsheet. Part A. Okay. Oh man, let's close this so that it is not disturbing me again. Right. Belton Park Resort is a new theme park located in the country of Beeland. The resort is made up of a theme park, a hotel, and indoor water park. So water park is what you are doing, and theme park is what a hotel is what I'm doing here. The resort opened 2 months ago and is already very popular. As all theme parks in Beeland are required by law to shut down, okay, in colder month of January. So that's the decision you have to take. Because of the risk of accidents, Belton Park Resort must decide whether to shut down the whole resort or just the theme park. Okay. So they have to take a decision that whether they should close the entire resort or open the theme park. Right? It could choose to keep open the hotel and or the water park. So they can even operate one or both. Since Belton Park Resort has not been open for long, there is limited historical data available, okay, about cost and revenues. However, based on its last 2 months, the following average monthly data is available. So what all you have is a monthly data, and you also have to take a decision for the month. So that's okay, that's perfect. Now, I'm solving hotel, okay? For me, hotel is important. Number of rooms, 120. Average room rate per night, $100. Average occupancy rate per month, 90%. Average nightly spend on extras per room, okay? That's $20. Contribution margin from extras, $60. Sorry, 60%, right? Okay, extra includes anything purchased by the customer not included in the room rate or the admission price. Maybe a cold drink and stuff like that. Management estimates that for January, the average room rate per night would need to be decreased by 50%. Okay. And the admission price for water park by 20%. That's for you. With such reduction, it is estimated that occupancy rate of 50% would be achieved for hotel, and the number of visitors to water park will be 52%, lower than the current level. So current level will come down to 50%. The average nightly spend on extra per room, 20 for hotel and 12 for the water park, remain unchanged. The running costs for the hotel and water park for each of the last 2 months are as follows. So you can see the cost of staff, maintenance, power costs, security, water costs, and you are given with the notes as well, which you have to read and just complete your calculations. So because I have to take a decision whether to keep it open or not, so first thing I need to do is I will start with the incremental income first of all. If I keep it open, so what will be my incremental income? Okay. And then the cost, because if you go back to the rule of 6, so incremental cost and income will be relevant for you, and let's see what is not relevant. So let's begin with the first one, and I'm doing my calculations for the hotel here. So I want everybody to be really concentrating and understand what exactly we are supposed to do in this case. So yes, let's begin with the calculations and let's see what options do we have in this case. Now, let's begin with the revenue first of all. Okay, revenue is what I'm going to work out first. Now, my revenue is divided into two things. One is the revenue from the rooms, and then I have the extras as well. Okay, I'm talking about the income here. Okay, now if I want, I can do my calculations in a working area as well. So I can open a working area and can give the references of the working area as well. So it's up to you how you present the information. Now, okay. So the first thing is working one. And here I'm doing working one. So let's first of all look at the days available. So the days are, I'm showing you a detailed working just for your ease, but you can just write everything in one cell through one formula. That's acceptable. Okay. So 31 days you have. How many rooms do we have? 120 rooms we have. So today is all hotel day, right? So total availability is how much? 200 into 31 is 6,200, right? Okay. Now, what do you think? 31, it's 120, sorry, it's 120, yeah. It's 3720, I beg your pardon, it's 120. So 3720 is the total availability you have. Now it says 50% will be operational here because I've just highlighted here as well. See, where it is. Yeah, 50%. Okay, 50% will be operational. So don't consider this 90%, consider 50%, right? So take this half. Okay, 1860 is the availability. Sorry, it's the occupancy that you're expecting. 1860. Okay, you can do the entire working in one cell without any issue, right? So what is the rate? The price, I would say. So the price, I think they have mentioned here that you will decrease the price by 30%, which means, yeah, your current price is 100 and 30% reduction means you work out the 70%, and that is 70 is the price. Price of the room is 70. Okay, price of the room is 70. So this is 70, right? Done. Okay. Then can I work out the revenue now? I have the price here. So I can do the working of revenue. I can show here is equals to 1860 is the availability, the capacity that we'll use, and 70 is the price of the room because there is a discount of 30%. So that makes 130,200 is your revenue from the rooms in the month of January. You are keeping this. You want to open this, so you know if you will open this. So this is your incremental revenue that you will earn. Okay, clear? Right. Then the extras. So the question says that 60% is the contribution margin from extras and the rate of that remains at 20. So that is not an issue. You can easily work out. Obviously, you will multiply this as well with the number of rooms here, definitely. So it's simple. Let's work out this together without any issue. So let's see. 1860 is basically the capacity that you will use. 20 is the rate per room, into 60% is the contribution. Okay, so 0.6, I'm using 60% because that's the contribution, and this, sorry, this gives me the answer of 22,320, right? So you can see the workings again, 1860 into the price of 20 into 60. Got it, everyone? So my total revenue now is 152,520, and here I will take up your questions as well. Yes. WhatsApp link is shared to you, that's fine. What, Omar, you want me to repeat, please? I will share the spreadsheet. Okay, that I can save right now. Okay. You want Y multiplying with contribution? Obviously, Farwa, variable cost you need to deduct, right? Because this is extra, right? So for extra, there is some extra cost which is not given below. So you have to consider that extra cost. That's why I will take contribution for this one. Okay, Farwa? And that's not part of the cost that is given below. That's fine if you have worked out everything in one cell. I'll repeat the rooms working, Omar. Okay. Okay. I will give you time then to read next time. But I do read the question, so I think if you concentrate, so you can be with me in that case. I do underline the things as well. Okay. Cell C53. Right. No need to color. See, this is the cell. 1860 is the occupancy, into 20 is the price that you are charging for the extras, and 60% is your contribution. So the variable costs of this you are deducting. So this is what you have done here. Okay. Okay. Omar was asking me for the working of rooms. So it's very simple, Omar. 31 days, and per day 120 rooms are available. This means you have total availability of 3720 rooms, and it says in January you will operate at 50%, so that makes 1860. Okay. Okay, that's fine. Let's now move towards the cost. So this is incremental income. This is incremental income. And this is now incremental cost. Let's see the additional cost. $130,200 is the revenue from the rooms. Okay. You can see here 1860 is basically your occupancy, and 70 is the price per room. Okay. So incremental cost. Let's see what we have here. First is, it says the running cost. This is running cost. Okay. So that's staff cost first. So let's read. Permanent staff. Included in the staff cost for the hotel is the salary of 30,000 per annum. Salary of 30,000 per annum for the hotel manager, and 20,000 per annum for the head chef. Okay. Getting my point? These are both permanent members of the staff who are paid for the full year regardless of their working hours. So friends, what do you think about this one? Is this salary relevant for taking a decision whether we should open this or not? So let me tell you this salary is basically committed cost. Committed cost. It's a commitment to pay them the salary, okay? And that's per annum. One more thing you have to keep in your mind, that's per annum, okay? So you are committed to pay them per annum this amount. Now, if you open in January, you will not save on this cost because it's a committed cost. You have to pay them regardless of their working hours and regardless whether you open in January or not. This means this is not a relevant cost for staff. This cost of staff is not relevant for your decision making here. Getting the point? I hope this is clear to all of you. So let me tell you here that this 120 includes a cost of these two that I should deduct, but it's per annum, so I need to make it per month, right? So staff cost working 2 in the working area, total cost is 120, right? Less the manager and less the chef per month. So what's that? What's that? What's that? It was 30,000, right? Divided by 12 per month. And head chef was 24,000 divided by 12. Okay, both divided by 12. So let's deduct these two. So now we are getting the cost after this is how much? Let's see. This minus this minus this, and it's 115,500. So this is basically not a relevant cost. If the question would have asked you to explain the reason for inclusion or exclusion, you may be asked for that. So remember, you would have mentioned here that this is a committed cost. You will be paying this cost irrespective of whatever you do. Okay. Done. The second is for the water park, so that I'll not read right now. That's for you people. Now, this staff cost includes temporary staff as well. So once I've excluded the permanent here, this means this basically remains the cost for temporary staff. So this is the temporary staff cost left now. Let's see what it says. The remaining staff costs, it says remaining, so that's 115, relates to temporary staff who are only paid for the hours they work. Okay, who are only paid for the hours they work, right? That's variable. If the hotel stays open in January, half of these staff members will continue to work, okay, because they are paid on the basis of hours. So if hotel stays in January open, half of these staff members will continue to work their current hours because their jobs are largely unaffected by the guest occupancy. Half will continue. However, the other half of the staff will work proportionately less hours to reflect the 50% occupancy rate in January as opposed to 90% occupancy in the last 2 months. Now, this is a very good working, and I want you to think 2 minutes to do this. Let's see how many of you tell me the answer for this part. I'll just show you the figure as well. It's the figure was 115,500. Come on, quickly. Just a minute for you people. Right, now let's begin and see what to do here. The remaining cost basically is of the cost of temporary staff. And this is very important word, and that is half. which means for this cost, you need to divide this with 2. Half means 50% will continue, okay? And the other 50% will need to work for a lower occupancy. So if I simply, first of all, divide this with 2, so this is quite clear that this 50% will work, no change, in the same way, okay? But this 50% will now come to move to 50% from 90%. Are you getting my point? I hope you are getting my point. So this 50% of temporary staff will not change. This cost will remain same. But the other 50% now will change, which means this 50% basically is working at the current capacity of 90%, which you now need to bring back to 50% occupancy. So I've splitted the two costs into two parts. The first part remains the same. The second part now needs to be shifted to 50% occupancy from 90% occupancy. So it was on 90% occupancy, and you have to bring this to 50% occupancy. So how will you do this? Just okay, let me show you here. Just open a cell. This is the figure. Divide this with 0.9 because this was based on the 90% occupancy. Divide this with 0.9, okay, and multiply this with 0.5. So divide this with 90 and multiply with 50. So this is the figure you will get here in this case, and that is 32,083. I hope you understood what I've done. I've divided the cost into two parts. One part, one half will continue in the same way. The other half needs to be reduced to 50% from the current 90%. And that's what I did. Okay, clear? So now with what figure I'm going to take in my calculation, that's the question. So it's simple. For staff cost, this 50% is an incremental one, and the other relevant one is 32,083. So in total, I'll be taking these two figures. Right? I hope this is clear to all of you and no issue at all as far as these calculations are concerned. If you have, do let me know then. Okay? Done? So I've done the workings here. I've given you the reference. I've used the minus sign so that it comes in negative. If you have any questions, please let me know. In fact, both are variable cost. Azan, both are variable cost. Both are dependent on the hours they work. But the first 50% is for those people who will continue to work their current hours. Okay? And the other 50% is based on those one who will not work on their current hours because they need to reduce their capacity from 90 to 50. Okay? Okay, so we have a question. I don't understand the answer you got. Angelina, which answer you are talking about? All variable costs are relevant, yes. But just try to understand one thing, that if the variable cost goes down because of the less number of occupancy. Now, first you had 5 people, now you have 2 people. So variable cost is relevant, but it will come down. So that's the reduction in variable cost, Omar, I'm doing. No, the water, listen, the water paragraph is here. Let me tell you, the water paragraph is here and here for permanent and temporary. So that will only be applicable to the water cost that you will solve by yourself here. Okay. Daniel, I hope this is clear. Okay. So I hope this is clear. Now, no issues in this working. Done with the calculations. If you still have, so just note it down. We'll come back again. Staff cost done. Now moving towards the next one, and that's what? That's basically maintenance cost is the second one. So let's read what is written for the maintenance cost. Okay. Working 3, maintenance costs. Maintenance is undertaken by a local company, Tech Work, which bills Delton Park Resort for all work carried out each month. Okay. If hotel and park are closed, Tech Work will instead be paid a flat fee for the month of 4,000 for hotel and 2,000 for water park. So for us, hotel is important. Okay. So flat fee we'll pay to Tech Work if we close it. And what if we don't close it? So if we don't close it, so we'll continue to pay the amount that we are paying right now. Right now we are paying 14,600. And if we discontinue it, so we still have to pay 4,000. So how much you think is relevant incremental for this decision to keep it open? Because 14,600 I'm paying right now, and 4 is something that I will continue to pay, which means the difference of these two is what I will consider as an incremental if I continue opening the park. The incremental, the additional. So that's what I need here. So in this case, I would say 14,600 minus 4,000 is what I will be paying in any case, whether I continue or not. I want to show this in negative terms. So that's 10,600 relevant one. Getting the point? If the question requires you to explain, then you have to mention that 10,600 is additional, because if I'm paying 14,600 right now and I continue to pay 4,000 if I close, so the additional that I'm incurring just because I'm keeping it open is 10,600, because it's an incremental cost, right? So that's for hotel. I hope no issue in this one as well. If you have, just note it down. We'll come back again and we'll ask you, we'll answer all your queries then. Power cost is the next one. So let's see what power cost has to say. Power cost is the next one. Now for power cost, let's have a look here. Power includes electricity and gas. Two things are part of power cost. Belton Park Resort pays fixed monthly charge for electricity of 8,000 for hotel and 7,000 for water park. 8,000 for electricity and 7,000 for park. Getting the point? Okay. Any issues? No issues. Okay. Now, this is a fixed monthly charge. Do you think this is incremental or it's a committed cost? So it's a committed cost. You have to bear it irrespective whether you continue or not. So in this power cost, there is electricity cost of 8,000, which definitely is not a relevant cost at all, because you will not incur this cost anymore. Are you getting the point? I hope you should understand this, because this is quite straightforward and no issue as far as this is concerned. Okay, done. Next, gas. The gas charge related to heating and include a fixed charge of 2,200 per month. So in this power cost of, what's the amount? 20,000, right? In this 20,000, 8,000 is the electricity and 2,200 is basically the fixed gas charge. So that also you have to bear at any cost. You don't have any option here to skip this one. So you remove these two, 10,200 cost. So you are left with the remainder. Okay. And what's the remainder? Let's have a look here. 20,000 minus 8,000 minus 2,200. So it's 9,800 you are left with. Now, what is this? Let's see. So 2,200 per month for hotel and 1,500 for the water park. Let's leave water park. The remainder, this is the remainder of the gas charges is based solely on the usage and would be expected to increase by 50% in January because of the colder weather. Now, first of all, this is a variable one. So this will continue to arise first of all, because it depends on the usage. So it's basically something that will continue. But not only this will continue, but this will increase by further 50% because of the colder weather, which means not only will this continue, but you have to multiply this with 150% so that you also incorporate the impact of the extension here, and that makes it 14,700. So I'll quickly repeat before I move to Excel. 20,000 was the power cost, which included 8,000 fixed electricity cost, just remove it, which further includes 2,200 fixed gas cost. Let's exclude this. You are left with 9,800, the remainder variable cost, and that pertains to gas. This will continue to arise. Not only continue, but this will increase because of the cold weather by 50% more to make it 14,700. So don't think I have to consider only the 50%. No, complete 150% just because it's totally a variable cost. So that's 9,800. I'll show my workings here in my one cell. I can easily show this. 20,000 minus 8,000. This is what you have to do in the paper as well. Not write directly. Do not write directly. Okay. Multiplied by 1.5 of F1. So that's 14,700 for you. Okay. Done. Dusted. Clear. No issues at all. I hope you all are understanding this. Right? Happy? Perfect. Power cost done. Security. If the hotel and water park close, no changes will be made to the current arrangements for the security. Okay. If the hotel and water park closes down, no change will be made to the current arrangements for security while premises are empty. So, do you think will this be relevant or not? So it's very simple. It says that no changes will be made to current arrangement security while premises are empty, which means that your security cost is 13,600. Is this cost relevant or irrelevant for you people? What do you think? So this 13,600 is, come on, what's your answer? Irrelevant. Yes, it's irrelevant. Why? Because this will be something that will continue to arise irrespective of you continue this or not. So in terms of this relevant costing principles, the security cost will be 0. Okay, this will be 0. Agreed? Clear? Perfect. Not relevant. Okay, because it is very clearly mentioned no changes will be made to the current arrangement. So it will continue to arise. Water. It is estimated that water cost for the hotel would fall to 6,450 for the month if it remains open in January. Now, what is basically the water cost right now? It's 12,900. So it says that from 12,900, it will come down to 6450. Okay, from 12,900 this will come to 6450, right? Now, however, the water cost for water park would be expected to remain at their current level. If hotel and water park were closed, all water would be turned off and no charges would arise. Right. Now tell me, what do you think is relevant here? So it says that it is estimated that the water cost for hotel would fall to 6450. So from 12,900, this will fall to 6450, which means that 6450 is what you have to bear any cost. 6450 water cost is a cost that you have to bear in any case, whether you continue it or you discontinue it, you have to bear this cost. So how much you will save here is the other 6450, right? It's the same figure, right? So the other 6450 is what you're going to save, and that's your incremental. Okay, so if you continue to open, so this is the additional that you will bear, because 6450 is what you will bear in any case. The additional that you will bear is 6450 now. So the relevant cost here in this case is minus 6450. That's incremental for water. Right, everyone? Do note down your questions if you have any. I'll answer once I work out the final figure. So it will remain at 6450 at any cost, which means what is additional that you are bearing is 6450, which means let's work out the final incremental positive cash flows. Okay. It's 30937, which means that it's a positive number, and considering positive number, you can keep this open for sure. And if you don't close it, that's fine, because your cost is basically less compared to the revenue or income that you are getting in this case. Okay, so you have to state that what you're going to state. So state is simple, that we will basically continue, because in terms of financial numbers, the results are positive. So it should remain open when it comes to hotel. Hotel should remain open. For water parks, you will decide and let me know. But for hotel, it's clear that it should remain open, because the numbers are saying that yes, definitely it is useful. Okay, got it? Now let's take up your questions. Okay, so what do you think when section is expected in this attempt? Okay, that I'll tell. In fact, first of all, to be honest, we can't guess now what is relevant and what is not, just because different variety of papers are now published. Different audience get different papers. Okay. Okay. Next question. Okay, sir, assuming if we save a cost, do we add the cost to the income? Now listen, you have to keep one mindset, Alicia. Either you keep a mindset that you will keep it open. Now, if you keep it open, so that's a cost for you. But if you keep a mindset that if you will close this, so that's a saving for you. The final result will not change, but it's the mindset one that you have to keep in your mind. Okay, so what I have done here is, by keeping in mind that I'll open this. So if I open this, I'm seeing what revenue I'm going to get and what will be my cost. Okay, so if you keep it like this, that if you will close it, so in that case, saving will be your income. Okay, and what you could have earned in that case would be your cost. So the net result will remain same. So that's why don't confuse, just keep one mindset. Okay, if I'll open this, so see what will be your income and what will be your cost. Okay, Aisha? Okay, sir, if the remaining gas charge of 9,800 was fixed, okay, so we would have only taken the additional 50%. Now, first of all, if entire 9,800 would have been fixed, so we would haven't taken a fixed cost. We wanted the variable portion in that. So somehow examiner would have mentioned that where is the variable portion. So first we would have worked out the variable portion and then only we would have done that. I will share the sheet. 6450, coincidentally, both the figures are same. Okay. But the one that I'm taking here is the additional that we need to pay if we keep it open. Now listen, the total is 12,900, out of which 6450 is a fixed sort of a figure that I have to pay in any case, right? What is additional that I need to pay if I keep it open? So that's the other 6450. So the other 6450 is what I've taken in my decision. I will take incremental one, additional one only. Okay, I will share the $1 million points together after the 5th day. I'll share a Google Drive link and you will include it will include all those things. Right, everyone? Satisfied? Happy? Any issues? I will share the Excel sheet. Up till now, are the explanations making things clear? Giving you the confidence, the courage, everything? Tell me yes or no. Great. Now, let's begin with the next part. And that next part is the next question. And let's move on to the next question, which is of linear programming. Linear programming, yeah, it's a very important area once again, but I will not utilize my time right now on this. I will directly move towards a question, a latest question that I've picked up for today's session, and let's discuss that question. Okay. Home electronics company question is in front of you. It's an MTQ that we are solving right now. So it's time for an MTQ here. Let's quickly jump and solve this MTQ. I did mention that I'm taking the class just to compensate the initial 45 minutes loss. So I'll complete this question. Stay with me. This is just for you people so that your time, what you deserve, you should get the complete time. Okay. Now it's the latest question of exam, home electronics, small appliances division. It's an MTQ, okay? So let's begin now. Small appliances division. Two of the products manufactured by small appliances division are the blender B and the toaster T. The standard cost card per unit for each of the products is as follows, right? So we have the selling price, we have direct material, 5 is the rate per kg. Direct labor, $7 is the rate per hour. Variable overheads, fixed overheads, and the profit. In first quarter of the year, the supply of material was restricted to 2000 kg per month. Okay, it was restricted to 2000 kg per month. So I hope this is clear to all of you. 2000 kg per month. This was due to global shortage, right? It is now April and it has been identified that material will continue to be limited to 2000 kg per month, but also labor hours will be restricted to 3200 per month. Okay. So the first quarter, only material was the limiting factor. But now in April, this remains same, but also there is a restriction on labor as well. The management accountant has supplied formulas for the production constraint as follows. And you can see the limiting factors are represented in terms of inequal constraints, which says to make 1B, 2 kgs is required, and to make 1T, 3 kgs are required with a maximum of 2000 what you have, because the word restricted means it's maximum. Okay. For labor, 3 hours are required for B and 5 hours required for T with a maximum of 3200. Right. Now, let's move towards the first question. What is the contribution per unit of limiting factor for product T in first quarter to the nearest whole dollar? Okay. Now, in the first quarter, do remember, in the first quarter, the limiting factor was material only. So what they need us to work out? They need us to work out the contribution per unit of limiting factor. So they need to work, they are asking us to work out the contribution per limiting factor. Contribution per limiting factor. Okay. So for this, what we need to do, so just keep this in your mind. And it's not a very difficult working, to be honest. It's a straightforward calculation that you have to do here. So what you have to do is that you have the selling price of T here, and that's 120. Okay, 120. From this 120, you minus materials of T, 15, minus 35 labor, minus overheads of 18. Okay, and this gives you the contribution of 52. Okay, 52 is the contribution. Right. Now, it says that how many kgs T requires. So it's simple. 15 is the cost and rate per kg is 5. So 15 divided by 5 is 3 kgs. 3 kgs. So 1 unit requires 3 kgs. This is what I've worked out. So 52 divided by 3 will give me the answer. Let's see what the figures I'm getting here. 52 divided by 3 is giving me answer of 17.3333 is the answer. Charge. So it's 17.33. Charge here. Keep it here. 17.33, right? Now, the answer is 17.33, but if you input here 17.33, so you will not get the marks, 2 marks, you will lose 2 marks because it says nearest whole number. So it's very simple. If this would have been greater than, if this would have been 17.5 or more, listen, 17.5 or more, so you would have made it 18. The nearest would have 18. But because it is less than 0.5, so the answer here will be 17. Now, someone was asking me today about the nearest thing, right? So this is how you have to think. So it's the 5 criteria. Either it's 0.5 or 5 or 50 or 100 or 5,000, whatever, depending on how much the numbers are given here, like in terms of tens, 20s or millions or whatever it is given. Okay, so this is what you have to keep in your mind. So the answer is 17, nearest whole number because it's 17.33. So the answer is 17, right? I hope this is clear. If you have any questions, just hold it on. I'll just ask you after the second or third question. So that's straightforward, OT. Limiting contribution per limiting factor. Now, the second question is using simultaneous equations. What is the total contribution? Because there's no graph that you can use ISO line here, okay? What is the total contribution to be earned from product B and T in April? Now, it's the April, not the first quarter. And in this April, now there are two limiting factors that you have to keep in your mind. That is material and labor. And the equations are given to you. So these are the two limiting factors only, which means if you would have made the graph of linear programming, just imagine if you would have made the graph of linear programming. So these are the two lines you would have made in your graph. I'm not showing you the accurate lines. I'm just giving you the idea. So these two would have been the lines only because there are two limiting factors. So no third line. These would have been the two lines on your graph and they would have intersected. And that intersection point is what you need to work out through simultaneous equations. Two limiting factor means two lines on your graph and they would have intersected. So the intersection point coordinates you need to work out, and that you'll do through simultaneous equations. So it's simple simultaneous concept. Obviously, this will not be expected on a spreadsheet. So that is why it is something that is coming here in your MTQ section B, right? So let's solve through simultaneous equations. I need some space. So here I have the space. So let me write here. It's what was the equation? It's 2b 3t 2b plus 3t is equals to 2000. And the second one was 3b plus 5t is 3200. 3b plus 5t 3200. Okay. And materials and labor. Okay, that's fine. So yeah. So now let's work out through simultaneous equation. So the rule of simultaneous is very much simple and clear. And the rule is that you have to eliminate any one variable from both the equations. So you have to select whether it's T or B, it's up to you. But you need to eliminate it because there is one elimination method and one is substitution. So I'm going for an elimination method here. And the rule is simple. I've decided to eliminate T from both the equations. So 5 and 3 is what I will use here as figures and will multiply with the opposite equations. Okay. So this is what I mean to say, that 5 I'll multiply with the first equation. And 3 is what I'll multiply with the second equation. Now this is a trick to eliminate things easily. So if I wanted to eliminate T, so I'll use the figures of the T and will multiply those with the opposite equations. Done? Now, make sure one more thing. Keep one in negative because then only you can eliminate it. If you will keep one in negative, then only you can eliminate it. So that's your choice. Whatever you need to keep in negative term, that is not a matter, but keep one in negative here. Okay. So I'm making this -3, for example. I could have done -5 as well. So let's solve this further. So what will be the situation? Equation 1. 10b plus 15t is equals to 5 2s are 10,000. Right? Second, 9b negative, because I've used the negative sign here, minus 15t negative into 9,800. No, 9,600. Okay, done. So ready to eliminate 15t with 15t positive negative. Perfect. Ready to solve this as well. So it's 1b is equals to, this is also negative, right? Everything will be negative in equation 2. 1b is equals to 400. Perfect. 1b is equals to 400. Now, once you have found out the answer of b, what you can do is, now you can find out the answer of other using the other equation, or whatever equation you want to. Just input this number in any of the equations, either this one or this one, you will find the answer, right? So let's find out b is 400, right? 1b means b, right? So b is 400. So let's input in the first equation this one, 2 400 plus 3t is equals to 2000, and you further solve this. So let's see what will you get here. So that's 800, right, plus 3t is equals to 2000, and you will further simplify this. So further simplification will give you the answer that you can quickly work out here. Yes, please. Tell me the answer. 400. Perfect. So the answer is 400 again. So T is also 400. Simple question. This is a latest exam question, okay? This is a latest exam question. So you have worked out the optimum production plan. Now you need the contribution. So what you're going to do? You will go to the contribution information here, which you already have been given, and considering this, you will do the calculations. So you have the contributions, or you need to work out that. So you know the contribution. In this case, you have the information here. So just deduct these and get the contribution for B. So the contribution per unit for B will be how much? 80 minus 10 minus 21 minus 12. So that's 37 for B. And for T, we did work out, and that was 52. Okay, so it's 37 and 52 here. I hope no issues in this case. 37 and 52. So let's work out the contribution. For B, it's 37 into 400 plus 52 into 400. And what is the answer? So let's work out the answer, guys. It's 35,600. Okay, 35,600. Getting the point? Any questions up till now? Yes. Clear up till now, both the questions. I'm at the chat box waiting for your questions if you have any. 35,600. Simple, clear. Say yes or no. Okay. In which equation you put these values? Now it's the contribution. Okay, it's basically objective function, I would say. What's objective function? Let me tell you. It's that 37b plus 52t. It's an objective function, right? Farwad, here is the calculation. See, 37 contribution into 400 units of B, 52 contribution into 400 units of T, and that's 35,600. Okay, Noman? So it's the objective function that we make in linear programming. Okay, great. Done, guys? Good to move? Great. Now, the next question is question 3. Which of the following statements about the use of linear programming to resolve limiting factor problems are true? So let's see what it says. The linear programming method helps to identify optimum selling price for the product. Wrong. It helps to identify the optimum units, and you just did that. See, you just did that. You found out the units here. So not optimum selling price, optimum units. Okay. Second, slack occurs when more than maximum available of limited resource is required. More than maximum, which means if you have a maximum of 2,000, 5,000, so it says slack means when more than maximum, which means above 5,000 is required, that's slack. Is slack above the maximum? Let's go back to our notes, and we have a slack definition: amount by which resource is underutilized. Underutilized means what? That if you have 5,000 and if you have used 3,000, so 2,000 is what you have left. 2,000 is your underutilization. 2,000 is your underutilization. So slack is not more than, it's the less than what is available. So that's wrong. Okay, it's wrong. Which means both the statements are false in this case. Getting the point, everyone? Clear? I hope no issues. If you have, please do ask me anything you want to ask. Okay, so the answer is D. Got it? Done. Let's move on towards the question number 4. Wow, what a good question this is. What would be the shadow price of material in large appliances division to the nearest whole number? It's a funny question. Now you will tell me the answer, okay? See, large appliances. Let's read about large appliances. This division also manufactured two products, freezer and dishwasher, which earns a contribution of 150 and 200 respectively. Both products use same resources, several of which are in short supply. What a question. In April only, 4,000 labor hours, 2,000 kg of material, and 3,200 machine hours will be available. It's a limiting factor. Three limiting factors, 3 constraints. The management accountant has applied linear programming and defined the following constraints. Now, that's a separate division to the small division. I remember a few of the students said that linear programming question came and there were 4 products. Man, that is a separate division, and that's a separate division. So each division has 2 products, and when there are 2 products, you can use linear programming. So why are you adding those small ones as well here? Okay. So in fact, 4 limiting factors are here. 4, not 3, 4. Material is a resource one, labor, machine time, and also there is a demand-based limiting factor that D maximum can be 250. Demand-based limiting factor as well. 4 limiting factors. Right. Now, labor and machine time have been identified as the binding constraint. So labor and machine time as the binding constraint means what? And an optimum production plan of 240 and 200 has been calculated. So what is binding constraint? Binding constraint means these are the two limiting factors which are your optimum production plan points. Okay. Now remember, the question said you need to work out for material. You need to work out for material. Shadow price is what? One additional kg available. What will be the contribution? So can you give me the answer, anyone? It's a very good question. What will be the shadow price for material? Wow, the answer is 0. Many misunderstood the question in the exam. Yes, the answer is 0. You know why? You know why? Because the binding constraint were labor and machine. This means the optimum production plan and your optimum answer was on the lines of machine and labor and not on materials. The optimum point and the answer that you worked out was based on the lines of machine and labor and not on materials, which means material is a limiting factor, but your optimum point is not there. So when your optimum point is not on any resource line, there is slack. There is slack, always slack. Underutilization is there. Let me quickly just give you a quick idea. I don't know about the accurate lines. I'm just giving you a quick idea. I don't know what the game is. If these two, labor and these two are the lines of machine, so here is your optimum point. Now the other two lines may be of material and demand. These other two lines are a one where optimum answer is not there, because it says binding constraint means these two are the one where the optimum point is. And on the basis of these two, you have these answers as well. So the other two lines where answer is not available, the optimum answer is not there, there will be slack. So whenever, remember, the lines where optimum answer falls is where the shadow price will be available and slack will not exist. So see here, shadow price, lines where optimum answer falls, you can work out the shadow price. So the binding constraint they mentioned was for labor and machine. So you could have worked out shadow price for these two. But lines where optimum answer does not exist. And what was that? One was resource and one was demand. One was of material and one is demand D. Here you will see the slack. Now you will be thinking, why, how I knew this? The only indication I had here was that the question said labor and machine have been identified as the binding constraint, which means the optimum answer is at these two only, and the other two lines, these two only, okay? And the other two lines, these two, are one where optimum answer is not, so there will be slack. So the shadow price will be 0 because there will be underutilization. And many did the workings and did it totally wrong. So what a good question, to be honest. One can't expect this to be 0, and one would say, okay, examiner, so easy. Yes, this is easy. Okay. The last one for today. Which of the following statements about linear programming method in large appliance divisions are true. Okay. Product D has a slack value. Come on, tell me. I've already explained it. D has a slack value. Yes, because answer was not at the D's line, and this is very much obvious as well. See, you could have made maximum 250, but your final answer of D is 200. You could have made 250, but your answer is at 200, which means 50 units you haven't made and there is a slack. And I did explain to you earlier, because the optimum answer is not at the line of D in this, so there will be slack. And by units, it's also obvious. Underutilization means that you could have made 250, but you did made 200 because of the binding constraint of labor and machine. You don't have machine and labor more available. Okay? So yes, there is a slack of 50 units. Very obvious. Even if even units were not given, then you could have also figured it out. Because you know the lines of optimum were labor and machine only. The other lines, there will be slack for sure because optimum answer is not there. And remember this $1 million tip, this one. Shadow price will always be there on the lines where optimum answer falls. Lines where optimum answer doesn't falls, there will be slack, underutilization, no shadow price. Okay? So yeah, that's true. Now, second, what you have, look at the units contribution, 150 and 200. Okay, 150 and 200, and the units are also given to me. Now, the next statement is quite simple. Contribution of 76 will be earned from optimum production plan for large appliance. Is it true? Let's check it. The contribution for F is 150 multiplied by units 240. Okay, plus 200 contribution multiplied by 200. So I don't know what is the answer. Let me check. 150 contribution per unit into 240 units plus 200 into 200 is 76,000. And yes, this is the contribution. Again, this is the objective function equation through which you have worked out. Okay? Clear? So yeah, that's true. The last, labor and machine time intersect at optimum point if shown on the graph. I have already explained this before. See my graph. I never saw that statement. Okay. See, yeah, labor and machine lines are intersecting because it was given an indication that these two are the binding constraint at final term. So yes, because the optimum point is there, because on the basis of these two you have worked out the answer. So there was an intersection point here where you have worked out the final answer. So yes, exactly, and A is the answer. All three are correct. Right, everyone? So despite the hiccups, I did my job completely. Though I could have said that, okay, time's up, but I didn't do that because I wanted to complete the today's task and I did it. So thank you very much for staying here and supporting me and yourself. Now the last question and answer session. If you need to ask anything, please just let me know relating to the question or whatever it is. Today's coverage was again a very good coverage. despite the initial hiccups. $1 million plan I will share for relevant costing further, pricing and risk and uncertainty as well for these two topics. So stay connected through the WhatsApp group. Okay. Now, limiting factor analysis, multiple limiting factor analysis, you can say. Okay. Daniel, right now I cannot explain you contribution line for sure, but let me see if I can include anything in $1 million plan for that. You don't have to draw the graphs. Because okay, we did took the water cost that pertains to hotel, and that was 6450. We did that, Azan Shakil, okay? But we only took the one that was incremental. I will tell you about the chapters tomorrow, last day. I will share the slides. Okay. So guys, if you are still not part of my groups, please send me a quick WhatsApp at this number. Don't leave the group. I'll share a lot of details and support in those groups once my webinar gets ended. So make sure you're part of the group. Okay. Now, please share your feedback. As to how the today's session was despite the issues. Are you satisfied the way I covered the three topics and the past papers? So what's your feedback? I know initially there was some problem, but other than that, my explanation and all were good, nice. Did things get again easy for you? Yes, you can use Asia contribution line, but not in this question just because there was no graph here. I'll share the date of the grand revision. Please, I need your quick feedbacks, guys. Happy, satisfied? Up till now, the 4 days, I hope, would have changed your mindset, would have given you the confidence and the new techniques as well. Mahank, you can message me, I'll explain you this. Okay, thank you very much, friends, for your feedback. Tomorrow is the last day of the webinar. Make sure you all attend because I'll be covering the new topics as well. Okay, the new syllabus changes I'll be covering in that as well. So make sure you are part of the tomorrow's last session. Don't miss out. Spread the word among your friends in the WhatsApp group and stay connected, and do join the group or send me the number. After the session ends, please give ACCA the feedback about this session, how the session went, and are you satisfied with the things or not. Thank you very much.